Hey guys, today in this video, we're diving into a comprehensive review of Bank of America's home equity line of credit, commonly known as HELOC. If you're a homeowner looking to leverage the equity in your home, this video is for you. We'll break down the features, benefits, and potential drawbacks of a HELOC from Bank of America. So, let's get started. Bank of America offers some compelling features for those in the market for a HELOC. Notably, its loan amounts reach up to a generous $1 million, which is considerably higher than what many other lenders might provide. This can be a game changer for homeowners with substantial equity in their property. Plus, the option to convert variable rate HELOCs into fixed rate loans provides borrowers with added flexibility and predictability. However, it's worth noting that Bank of America doesn't offer traditional home equity loans, and you must close on your loan in person. Bank of America HELOCs have loan limits ranging from $25,000 to $1 million. The loan-to-value ratio is up to 85%. While the minimum credit score requirement isn't disclosed, the repayment terms include a 10-year draw period followed by a 20-year repayment period. Discounts include an introductory APR for 6 months, a 0.25% rate discount for autopay from a Bank of America account, and a 0.625% discount for Preferred Rewards members. There are no annual or application fees, and closing costs are covered on loans up to $1 million. However, there is a $450 early closure fee if you decide to close your HELOC account within 3 years. When considering a HELOC from Bank of America, it's essential to weigh the benefits and potential drawbacks. One major advantage is that there are no application or annual fees, making it a cost-effective option if you're looking to leverage your home equity. Additionally, for lines up to $1 million, Bank of America often covers the closing fees, which can save you a significant amount upfront. Several discounts are available, including a 0.25% rate discount for setting up automatic payments from a Bank of America account, discounts for making a large initial withdrawal, and being a Bank of America Preferred Rewards member. You also have the option to convert part or all of your variable rate HELOC to a fixed rate loan during the loan term, providing protection against rising interest rates. On the downside, if you decide to close your HELOC account within 3 years, there's typically a $450 termination fee plus any closing costs that Bank of America initially paid for you. The starting line amount for a Bank of America HELOC is usually $25,000, which might not be suitable if your home equity doesn't cover this, or if you need a smaller amount. Furthermore, while Bank of America offers extensive online services, the final loan closing must be done at a physical financial center, which might be inconvenient if you prefer entirely digital transactions. Additionally, if you're not already a Bank of America customer, you might miss out on some perks like additional rate discounts for Preferred Rewards members. Bank of America HELOCs are ideal for those looking for a jumbo HELOC of up to $1 million. They are also a good choice if you're a current Bank of America customer, as you might get preferential rates or reduced fees, and the application process can be smoother. Since Bank of America has financial centers in most states, it's also a good choice if you like face-to-face interactions or want a physical location to visit. Generally, Bank of America offers competitive interest rates, and if your credit score is strong, you could qualify for the best rates. However, if your financial situation makes it hard to meet the criteria for lower rates, or if you're looking for a smaller, short-term loan, Bank of America's HELOC might not be the most cost-effective choice. The early closure fee of $450 is something to consider if you're not planning on keeping the HELOC open for long. Getting a home equity loan with Bank of America can be a streamlined process if you're prepared with the right documentation. You can apply by submitting an online application or visiting a local branch. Be ready with documentation like proof of income, personal identification, and information about your home's value. After applying, Bank of America will review your details and may require a property appraisal. Generally, the process from application to decision can span several weeks, depending on your circumstances. Once your application is in, Bank of America provides lending specialists to guide you throughout the process. These specialists are there to assist, and if you're interested in having predictable monthly payments over a fixed term, they can also help you explore the fixed-rate loan option. Bank of America offers a digital platform where you can securely upload necessary documents. However, you'll have to close at a physical financial center as you can't complete the closing process online. After closing, you'll be able to access your new home equity line of credit whenever you need it. While the application process may be slower than some other HELOC lenders, you can speed it up by ensuring all your documents are up to date and promptly responding to any inquiries from the bank. Proactive communication is key for a smooth experience. While researching Bank of America's HELOC reviews, we noticed a scarcity of HELOC-specific feedback. The majority of reviews were centered around Bank of America's general banking services. Despite this, we've managed to extract some insights from a mix of third-party sites like Consumer Affairs and Trustpilot that shed light on customers' real-life experiences. One customer on Consumer Affairs noted that Bank of America is very easy to work with, both on their mortgage and their HELOC, and they've had a couple of mortgages with them that worked as expected. Another customer on Trustpilot mentioned they've been banking with Bank of America since 2003 and have experienced great customer service. Wondering if you meet the eligibility requirements for a Bank of America HELOC. Typically, a credit score in the mid to high 600s is required, although higher scores can secure better rates. Your financial history, including your credit history, debt-to-income ratio, and payment history, plays a significant role in eligibility and terms. The loan-to-value ratio is also a crucial factor, and Bank of America generally prefers a loan-to-value ratio of 85% or lower. To meet these requirements, consider making extra mortgage payments or improving your home to boost its market value. Bank of America doesn't have strict rules on how you can use your HELOC money, but it's wise to use HELOCs for value-adding purposes. Common uses include home improvement projects, consolidating high-interest credit card debt, covering education expenses, or paying for major life events like weddings or medical emergencies. While you have the liberty to use the funds as needed, remember that your home is the collateral, so careful spending will help you make the most of this financial tool without risking your property. Navigating the potential costs associated with a Bank of America HELOC can save you from unexpected charges. It's essential to understand both the upfront fees and any potential penalties that might arise during the life of your line of credit. Bank of America covers all closing costs on HELOCs up to $1 million, but should you decide to pay off your account within 36 months of its opening, be prepared for an early closure fee of $450. There are a few exceptions to this fee, such as accounts with a line amount under $25,000 or properties located in Maryland and Texas. Bank of America offers a special variable intro rate on HELOCs. For instance, in California, borrowers can benefit from a 7.49% variable APRO for the first 6 months. After this introductory period, the rate will adjust, and the post-introductory rate differs by state. In our California example, the rate changes to a 9.90% variable APRA after 6 months of your HELOC being open. Before committing to a HELOC, simulate both rates in your budget and be prepared for your variable rate to change. The initial period might offer savings, but it's the variable rate that will influence your long-term costs. If you're not sure if Bank of America is right for you, comparing it to other HELOC lenders can help you weigh your options. For instance, compared to PNC Bank, Bank of America's HELOC starts with an introductory variable rate for the first 6 months. Both banks have rate discounts when you set up automated payments from their respective checking accounts. In terms of loan limits, Bank of America's HELOCs go up to $1 million, but the maximum loan-to-value ratio isn't specified. On the other hand, if you're a military member, Navy Federal might be a better fit as it offers credit lines up to $500,000 and a longer draw period of 20 years. However, if you're eyeing larger loan amounts and want a lower introductory APR, Bank of America could be more appealing. When comparing Bank of America to Guaranteed Rate, the latter stands out for its speed, approving applications in as little as 5 minutes and offering a 100% digital HELOC experience. However, while Bank of America starts with a lower introductory APRA, Guaranteed Rate's base APRs are slightly higher. In terms of loan limits, Bank of America offers more substantial HELOCs, allowing borrowing of up to $1 million compared to Guaranteed Rate's $500,000. Bank of America's HELOC is a robust option for homeowners with substantial equity, offering competitive rates, discounts for existing customers, and the ability to convert to a fixed-rate loan. The absence of application and annual fees, combined with the coverage of closing costs in most cases, makes it an attractive choice. However, it's essential to consider the early closure fee and the requirement to finalize the loan in person. Before deciding, weigh the pros and cons, consider your financial situation, and compare with other lenders to ensure you make the best choice for your needs. Alright, so I believe that's pretty much for this video. If you find it helpful, consider subscribing and giving this a big thumbs up, and I'll catch you in the next one. Thanks.